Hi, and welcome to another weekly recap. So, today we are going to recap June 23 to June 27. So, first, let's start with the pair GU and then we can switch to pair gold. So, in GU, we got one L and it's a partial L and it's a phase D, and we got a partial L. So, it didn't go up to minus 50, it I just cut shorted by minus 29 and it's minus 0.6. So it's a good trade management, and let's see what happened on this week and what happened especially on GU and why there was an L there. And let's jump into the board and see in detail. Okay, starting with June 23, 2025 from the daily chart. So here we can see that the price had swept the buy side liquidity and it has internally paused bearish. So what I expected in the start of the week is price to continue this bearish internal structure till it mitigates this daily demand, at least this daily demand. So once the price mitigates this daily demand, price can shift bullish, or it can flip this demand zone and continue to deep down and also make a daily pause bearish. So anything can happen, but for now what we know is we can follow the internal structure and look for sales and target this daily demand zone. Okay, this is the perspective from the daily chart, and we are having a good daily supply which is unmitigated. So I can expect the price to daily internally pause bearish and then take out this leg inducement, trap the buyers, and then price can push down. So that can happen. That's why probably this is unmitigated and there is a fair value gap left listed. So this is a short analysis of the daily. So let's jump into the 4-hour chart and give it a detailed analysis. So in the 4-hour, uh, price at a pause bearish and internally the price is bullish. So now we can expect the price to continue the bullish internal structure till the price mitigates the daily supply. But the thing here is price at chalked bearish, and this fractal structure can hold. I mean, this supply can hold as it also flipped the demand that was holding the price, which means this low can be weak and it can be taken out. But this is not a normal low resistance liquidity. It is formed via sweep of liquidity, and yes, it is a very good low, and probably price might liquidate this low and you know push the price up again. But that's a different story. But what we know is the supply is holding the price. So if the price mitigates the supply, I'll be waiting for H1 confirmation and then I'll be looking for sales. That's it. So this is H1. So H1, we can see the structure very clearly. So this is a kind of liquidity sweep, and the price started to push down. So I mark this as H1 swing low. If the price takes out this low, then this would be the H1 swing high, which is also very good high because it has also swept liquidity. So now we are seeing a low resistance liquidity here. So if the price mitigates the 4-hour supply that is currently holding the price and chalk bearish, then I'll be looking for sells from the freshly formed supply. Then I can look for sells targeting the low resistance liquidity as well as the swing low. So the analysis is simple. So what happened during the session? And yeah, price since there is a lot of low resistance liquidity, waiting for H1 chalk might be too late. So I can also look for M15 confirmation entry if the price mitigates the 4-hour supply. So this is actually M15, and yeah, here we go. Price this is M15. Yeah, price mitigated the 4-hour supply, and price actually M15 actually paused bearish. So this was the POI that flip the demand zone that was holding the price. So if the price mitigates this one, I can look for sells. Since a lot of low resistance liquidity was there and the drawn liquidity was clear, so I placed a sell limit order, which I usually don't do. I placed a sell limit order and expected the price to mitigate, tag me in, and then push the price down. But analysis played out. Price actually pushed down after mitigating the 4-hour supply that is currently holding the price, but I was not tagged in. price just pushed down rapidly without tagging me in. So it would have been a great trade if the price tagged me in, but it didn't tag me in. And once the price took out the H1 swing low, I think probably this was a news, and then the price started to push up rapidly. So this could have been if I got tagged in, though this would have been a winner. So if you guys take LC1, then it's a clean win. But I don't prefer LC1s for the POIs that was formed on the previous week. So I waited for more confirmation, and the price left without me. So yeah, it is what it is. So moving on to June 24. So we can give a bit analysis on the daily because the price is still not in the same area of value. It has moved a bit. So here we can see that the price had swept some sell side liquidity and then pushed rapidly. So as I already told you that this POI could be an inducement and it has been taken out and price has mitigated the daily supply. So what I'm expecting here is, since the price had already reached the discount prices and it has swept some sell side liquidity and it has given a strong bullish momentum. So what I can expect is price to continue this bullish momentum till it takes out this high. So probably if the high is taken out, then this would be my new daily pause bullish. So coming to 4 hour, and here you can see some low resistance liquidity in the daily as well. Sorry, in the daily there is no low resistance liquidity, but in the 4 hour chart you can clearly see that the high is weak and it has formed a kind of equal highs. And with this bullish momentum, price can easily push up and take out the weak highs. So that's the plan today. Play to look for buys and target the highs. So H4 swept liquidity, boss bullish, internally boss bullish. Just look for some bullish sweep zone in the H1 chart and then boom, look for buys. So looking for sells is valid only when the price makes an bearish high boss. If there is a strong shift if the supply takes over and if there is the demand failure. Until and unless that happens, I won't be looking for sells. I'll be just following the trend. So here you can see this POI is valid because it has got inducement and this demand is currently holding the price. If this demand fails, then I can change my bias and start to look for sells. So it's simple. So though the price is still in the daily supply zone, so I'm still looking for sells because of the bullish momentum that we are facing. And this is the M15 chart and there is a clear lid. So in this case, I'm using LC1 because this demand zone was formed during the Asian session and this demand zone was formed on this day, on the trading day. It was not formed on the previous day. So I can use LC1s for this one. But unfortunately, price did not mitigate this demand zone which I marked and it started to push up. So I just wanted to continue the trend. I marked this POI which has also got inducement, but it was the out of session and price did not mitigate any of these demand zones. And since the price also took the demand high, the daily demand high, so we can expect the price to chalk bearish or even boss bearish, and then we can look for sells targeting the 4 hour supply below because there is no valid demands. If this demand chain gets failed, the only demand would be left right here, but this demand would act as an inducement for the demand below. So probably we can expect a deep push down. So let's see. Coming to June 25, here you can see on the daily that the price had swept the internal high. So sell side liquidity sweep, so buy side liquidity sweep. So price can come down a bit and then push up. So I want to play this bearish move. Uh, but sometimes price did not close above, so price can continue pushing up one more bearish candle, one more bullish candle, and one more bullish candle, and then the price can start to pull back. So unless and until I get a strong bearish shift in the H1, I won't be looking for sells. So in the 4 hour chart, the 4 hour is not actually boss bullish, but I'm expecting the price to boss bullish today because of this bullish momentum. But you can see that the demand is getting weaker and it has formed a kind of ascending pattern. So if I get chalk bearish, then that would be the signal for me to look for sells. Unless and until that happens, I'm happy to look for buys with the valid demand zones that is present during the H1 chart. So here you can see that this acts as a valid demand zone with a strong inducement, and there is low resistance liquidity above. So looking for buys is totally valid if the price mitigates this demand, and then I can wait for H1 to chalk bullish and then look for LC1s, or I can directly look for M15 confirmation entries or M15 LC2X entries. So what happened on this day? But there is a catch. The price swept the buy side liquidity and chalk bearish. So I'm expecting the price to liquidate the leg inducement here. And I'm trying to catch this move. So it's a quick in and out trade. It's risky, but it's worth it because this is the only lid that is available in this leg. So we can surely expect the price to take out this lid. And yeah, this is the chalk bearish line. And since there is no lid for this leg in M15, all I can do is wait for confirmation entry or LC2X models. And here we go. We got actually a confirmation entry. So price push down, pull back, push down, and here we go. And this was the 61 point, and the price mitigated the 61.8 level. This one, and this was the mitigation candle, and I placed my trade right here. Yeah, I placed my trade right here. Price went down. There was this demand zone which actually reacted, and then price did not reach this. Actually, I expected the price to take out this demand, which is to act as an inducement for this demand zone, but price respected this demand and then pushed up. So I reduced once the price reached to this demand zone. I reduced my stops just to above this high, and price pushed up, and this demand got respected, and price made equal lows and then started to push up. So it's kind of weird, but it still happens in the market. Sometimes the POIs that you expect to be low probability actually plays out, and they sometimes give you a clear winner. So it is what it is. Okay. Okay, yeah. This could have also been an LC1 trade. If you consider this as LC1, that's also fine. But for me, it's a mitigation entry candle. Okay, this is what happened. This is the partial L that I was talking about, and yeah, reduced stop loss to good trade management. Expectation was to this candle. If that price moved a bit down, then I would have moved my stop loss to break even. Then there would have been a break even trade. So coming to June 26. So in the daily, it's clear that the daily as was bullish, and this low is strong because it has swept liquidity, and this demand is valid demand zone. So now I can expect some kind of swing pullback towards this demand zone because um, if there is a strong shift in the H1, then I can look for sells. That's totally valid. But since we are having a strong bullish momentum, I'm not currently looking for sells. I'll be focusing on buys now. So this is the H1 for our internal structure that is still bullish, and this is the demand that is holding the price. I can look for sells, expecting the price to mitigate this demand zone and then to make the next higher low. I mean, but for that we need a strong confirmation in the H1, like H1 chalk bearish. If the price chalk bearish and pulls back into a valid POI, then like yesterday, we can look for that quick in and out trade. Like we can set some rules like for that, for these kind of quick in and out trades, we need small the liquidation candle should be small. Like for example, because of the liquidation candle was a bit large, that is around 17 pips, I was not able to quickly get in and get out of the trade. So that was the issue. So if you get a small liquidation candle, then that would be great. Then you can quickly get quick 1.5s or quick 2s, which would be super useful for your next. So, continuing with the H1 analysis. So, we are expecting the price to chalk bearish, and this with this swing structure in mind, this chalk actually seems like an internal boss bearish. Then we can look for sells targeting the demand zone that actually we are playing the phase C shots. So, did that happen? Actually, yeah. Uh, okay. Okay, this is June 28. Okay, okay. So, uh, price mitigated this daily demand zone. So it did not give me any opportunity to look for sells, but yeah, price actually mitigated the. Okay, okay. Um, Price respected this demand zone actually and started push up. So this was that demand zone, and there was no price just started to push up, and this became the valid demand zone, from which I can look for buys. So there was a clean LC1 no, that could have been taken, but I did not take that LC1. Why? Because there are a couple of reasons for that. The first thing is I wait the coming to the session. I waited for the price to chalk bearish and play the swing pullback. But when the price rallied up, I thought I can continue to look to play longs from the demand formed during the Asian session. So, but there were some risk factors. This demand formation was not nice, and it was formed during the Asia and does not have a lid and did not sweep liquidity. Thus, it was an easy POI to fail. So I waited for an extra confirmation like LC2X or confirmation entry, which did not happen. And finally the LC1 played out, and it was a clean trade. So, but I am not assuming this as a missed trade because it was a calculated missed trade. So I think if you are aggressive, you must be continuing with the aggressive trades all day long. Otherwise, um, you will miss on the setups where it plays out. You might think that it might not play out, but actually it does. So that's what I learned in this week. So the daily is still having that strong bullish momentum. I think it does not seem to come down. So I can look to continue this strong bullish momentum. So in the 4-hour chart, the demand started to consolidate. But if I get a strong bearish shift, then I can look for sells. There were in the H1 chart, I can see traces of low resistance liquidity and early signs of the price coming down. So this is a valid demand from which I can look for sales. Though this is formed the outside today's trading session, I can look for direct M15 entries because there is a lot of low resistance liquidity below, and the demand is also getting weaker. So there was an actually LC2A that actually played out, but I did not take this trade because the price was consolidating. Price can sweep this this low, and then again it can start to push up. So I did not take this trade. And one more, the main reason was the liquidity candle. The liquidity candle was 23 pips, so I was not interested in taking this trade. And also, it has formed a minor equal highs. If this candle had taken this high, then this would have been the liquidation candle. Then I would have taken the trade here. This would have been a much preferred trade. But since it did not happen, I left this trade, and in it almost played out, but it did not play out. So price came till here. So this would have been a break even for now. But even though it is a break even, it would have costed me some amount because of the swap charges and overnight fees. So that would have added up, and it could have incurred more charges if I had held this trade. So I left this trade alone. So this is about GU. So let's jump into XAU and see what happened on XAU. So in XAU, there was a trade on Monday, which uh, so let's jump into the whiteboard and see what happened on XAU and how I missed the trade. I mean, how the trade presented itself. Though it's a missed trade, but still the analysis played out. In real life, you always don't. The real life is you. It's not as equal as backtesting. These missed trades will be counted as profits in the backtesting, and you can see that your account growing steadily. But in real life, you know, especially when the time is not by your side, whenever there is a losing trade, you will sit in front of the desk, and whenever there is a trade that ended up as a good winning trade, you'll be missing those trades. So it all depends on the luck factor, even though you have some skill. Especially this happens for a part-time trader like me. Um, you don't know when and the professional work, emergency work kicks in, and then you have to leave your desk at any cost in order to preserve your actual income. So it is what it is. So let's move into the board and see what happened on this day. Sorry, the logo looks same. Okay. Coming to XAU on June 23, 2025. Here we go. The daily internal structure is bullish, and we can expect the price to continue this internal structure till the price takes out the daily swing high. So the expectation is very simple, and you can also see that the supply got weak, and you can see that this rejection here, and price started to build push up, so we can expect some bullish reaction and price to take out the daily swing high. So this is the demand zone that is holding the price. If the price flips this demand, then I'll be looking for sales targeting this low, probably this low, because it is an unmitigated demand for me. It is slightly mitigated, but price did not reach the 50% of this demand zone. So there can be unfilled orders right here. So price can push down to mitigate this demand zone and then push up. So that might be the two possibility of this week. Price either can respect this demand zone, or price can either flip this demand and continue pushing down. So anything can happen. So let's play the price action. So this is 4-hour chart, and you can see that uh, the internal structure is shifted bullish, and this is the demand that is currently holding the price. But I am not super confident in this demand zone. Why? Because of this, the way the demand zone has been formed. It is formed via the low resistance liquidity. So this demand can hold. So this demand can hold, or it may not hold, or this demand can be flipped, and the price can take out the swing low. Anything can happen. So all the demands are mitigated. So this is the only unmitigated demand here for this week, and price actually mitigated it, and it gave a fake. Probably this could have been a fake reaction, because if I analyze from what the price is reacting from, so it is reacting from this demand zone. So price has already mitigated into the demand, gave a fake reaction, and then pushed up. So sorry, gave a failed reaction, and then it started to push up. So let's stick to the price action that there is low resistance liquidity and this demand can fail. So let's keep that in our back of my mind and start to trade. So uh, this is H1 was bullish, price is in the discount prices, and price has mitigated the extreme demand zone. So then now, if this was a high probability demand zone, I would have looked for M15 entries directly. But since it is a low probability demand, I'll wait for much more H1 confirmation before jumping into the low time frames. So what is that more confirmation? Price to chalk bullish. So if the price chalks bullish, then the internal structure and the swing structure would be aligned. Then I would be much more confident in looking for buys, targeting the highs. So at the start of the session, here we can see that the price had swept the sell side liquidity. So if the price was bull, I mean internally was bullish, then we can look for buys. So here we go. Price swept sell side liquidity, internally was bullish. So now this is a freshly formed supply demand zone from which I can look for buys. So let's see what happened. So there is a clean LC1. Uh, though there is low resistance liquidity below, price can flip this demand zone, but still this is freshly formed demand, swept liquidity, was bullish, structural alignment is there. So let's forget about this low resistance liquidity for now and stick to the market structure for now. And here is the lid. If the price mitigates this lid, then I can take the trade. Clean, very clean. At you know, if this is 239, so to assume this is 245 candle, this is 230, 2 o'clock, 145. Yeah, exactly at 1330. Price liquidated the lid, and here you go, boom, gone, easy winner. But it ended up as a missed trade for me. So if you guys caught this trade, well and good, so it was a clean winning trade. Price, though you know, price did not take out the high, and the high was still intact. That's why I was so confident in this trade, and yeah, it ended up taking the highs. So this structural alignment is very strong. Swing and fractal structural alignment is very strong. It makes the high weak, I mean high or the low weak, and we can easily have a drawn liquidity to target. So in this case, I was helpless. Clean trade. I could have moved into positive side of the profits, but this happened all day, all week. So this is the dark side of being a part-time trader, but I don't recommend you to be full-time trader directly. So if you are frustrated like me, I'm totally frustrated because it's not the first time that I miss a beautiful trade, and it's also not the first time that I end up losing a trade that looks confident but it goes out of my hands. So yeah, I can't say that trading isn't for me. Just keep hustling. You know, uh, I may find some rhythm, then I may uh, be more consistent, then I can be on the desk whenever the analysis and the trade plays out. Eventually, I could be profitable. So once I start to trade full time, then approximately there would be around 200 to 210 trading days. I would be able to attend all the trading days without fail, each and every minute of the session. I'll be on the desk. So yeah, that would increase my profitability. I can use the full potential of my strategy. Everything works beautiful. But for now, I need to accept these losses. I need to accept these missed trades. I can't switch strategies because the strategy has worked. Strategy has worked. It's me that it's my life. It's not only me. It's my lifestyle. It's my uh, professional job that is not allowing me to take profits. So yeah, just keep hustling. Tables will turn. Time will come. Once I start to get profit, I can transition into a full-time trader. Then everything changes. So yeah, getting from 1 to 10 is tough. It's very hard. It's as in the pain, but once you go through it, getting to 10 to 100 is damn easy. So still hustling. Let's see. So from the daily perspective, on June 24, 2025, the price is still on the same area of value for me. The demand is the demand is having a failed reaction. So this is the first sign that this demand might fail. If this demand fails, then this low can be easily taken out. If this low is taken out, there is no other demands to support the price. So obviously, price would take out this low. So that's the analysis. So the 4-hour internal is still bearish. So I can expect the internal bullish, internal pullback to this 4-hour supply, but um, I'll be much happier to look for sells targeting the expecting the daily demand to fail. Cool. So H1 is now boss bearish. Yeah, yesterday your price went up, and yeah, once the price is taken this high, it started to come down, but that's not an issue for me. For me, I get 2.5 hour. I'm not, you know, I'm not a positional trader. I'm not um, predicting the price for the next 2 to 3 months. I'm predicting the price for the next um, 50 to 60 pip move. That's it. If I get that move right, I'll be profitable. I'm out of the trade. So yeah, um, price push down. H1 was bearish, and yeah, this is a valid demand zone from which I can look for sells. If the price kind of formed some kind of liquidity, pushed up, took out the liquidity, I can look for sells from this POI and target the low resistance liquidity below. Otherwise, if the price directly pushed up, then this would act as a lid for the inducement above, for the 4-hour supply above. And once the price reaches that 4-hour supply, looking for sells directly is valid, but I'll be looking for the structural confirmation. You know, structural H1 is once the price takes out this high, then the price would internally boss bullish. So I'll be looking for the price to chalk bearish. So this would confirm that the swing and the fractal are aligned. Then I can look for sells with much more confidence. So moving on. So let's see what actually happened on this day. The price just kept rallying down. There was some low resistance liquidity being formed. I expected the price to push up, take out the high, and then come down, but that did not happen. It formed some liquidity, again started to push down. So the demand didn't step in to take out that liquidity. So there is no trades today. So moving on to June 25, 2025. So the daily demand is still holding the price, and now we are seeing some rejections of this low. So from the daily perspective, we are not having a clear bias because this daily internal structure is still holding the price, and we swept some sell liquidity. So we can expect some bullish reaction, or we can expect the continuation of the bearish move and take out, I mean, the failed reaction, and then take out the low internal low. So anything could happen. So let's stick on the 4-hour and H1 for now. So the from the 4-hour perspective, this is a supply that is holding the price. Since two things can happen, what we saw from the daily, I'll be looking for a strong H1 confirmation before looking for sells. I mean, before getting involved. So here we go. Price mitigated the 4-hour supply, and then we are having a strong sweep of buy side and chalk bearish, clear bearish sweep zone. So from the freshly formed supply, I can look for sells, but the caveat is price did not reach the premium prices, and it is just a small mitigation of the 4-hour supply, but that is enough for the price to push down. Yeah, this is M15, I probably guess. Still H1. Yeah. Okay. Okay, I think I didn't provide the M15 screenshot right here. Yeah. Okay, let's understand what happened with this EOD notes. Okay, coming to the session, the idea was to play the H1 run to external phase and target the H1 swing low. Okay. As expected, the price mitigated the 4-hour supply and had a chalk bearish and convincing one with sweep of the Asian highs. Cool. Okay. I tried to catch the move with LC1, but price rallied down. Okay. Price action. Once the price chalk bearish, there was a clear lid here, but I was not able to capitalize on this. Probably this could have been the lid. Yeah, this could have been the lid, and price did not take out that lid, so I was not able to capitalize on that move. LC1, but price rallied down without taking the lid, and the price never came back to give me an entry. So yeah, price actually came back again, but that was out of the session. But I could not trade during the off sessions. So there is no trades on this day. So June 26. So the daily demand is still holding the price. So I'm not sure whether to look for buys or sells. So it's better to stick with the lower time frames and the session direction. So here we can see that there is some strong rejections of this low. Not sure what this low is, but there is strong rejection of this low. But there is no structural confirmation. There is no chalk bullish. But for now, what we know is that this demand is, this supply is currently holding the price. And if I get a strong H1 structural shift, then I can again look for sells targeting the swing low in the H1. So here we go. Price again swept some buy sell liquidity. So this is the chalk bearish line. So if the price chalk bearish, then I can look for sells targeting this demand zone. So why I am stopping with this demand zone is this for me is a strong low because it swept some sell side liquidity and internally was bullish. So for me, this is a strong low. So price can hold the price and then make a deep swing pullback and then boss bearish, I mean internal boss bearish, and then the price can push down. So I can look for sells targeting this demand. So once the price mitigates this demand, then I would be break even as app. So price can react from this one and take out my stop loss, but I don't care, and then push down again and make this low weak. I mean, take out this low and eventually take out this swing low, but I don't care. I am a bit conservative. For me, I'll protect my stop loss. So, uh, yeah, actually, price chalk bearish. It not in a way that I expected the price to do, but you can see there was no lid, nothing. So all I can do is wait for an LC2B or LC2A or M15 confirmation entry. Probably this would not happen, and I would not be involved in this trade because LC2As take a lot of candles to happen, and if that happen, I would not get sufficient risk to reward. So probably there would not be no trades. Let's see what happened. Okay, and yeah, there was no trades on this day. Coming to June 27, the daily, as the daily internal has finally got taken out, and the liquidity below got taken out. So price finally internally was bearish, and now I can expect the price to push down and reach the daily demand below. So that's a big expectation, but we can confirm that with the 4 hour and H1. So this is the supply that is currently holding the price. If the price mitigates this supply and chalk bearish in the H1, then I can look for sales targeting the daily demand. But also I can look for buys, a quick in and out trade, expecting the price to take out the buy side liquidity above inside the 4 hour supply, and also expecting the price to reach the H1 premium prices. But price kept rallying down. There was no chalk down or chalk up, just one push down and almost take out the daily demand zone. So uh, probably this might be enough for the price to chalk bullish, or this could be a fake rejection and the price could push further down into the daily demand and then push the price up and give a bearish reaction and then start to continue pushing up. So things are getting bit interesting for now. uh, Let me quickly show you what happened on the June 26th. Okay, June 26, 15-minute chart. So this is how I do a bar replay. Just use a white rectangle and cover it. That's it. So it's June 26 and June 25. Okay, let's move it to June 26. So here we go. Was there was no trades as yeah, price actually mitigated the supply, but that was around 19 o'clock. So there was no trades on this day. So yeah, that's why I didn't take any trades. Cool. But yeah, this is totally valid trade if you're trading off sessions because there was low resistance liquidity down here, which could have been easily taken out. So yeah, actually it ended up playing out. Yeah, it ended up playing out, and yeah, boom. Uh, Setting up a sell limit is also valid, but I'm not interested in those kind of entry models. I'll just stick with mine. So yeah, that's the updates for this week on both XAU and GU. So let's see on the next week what happens on next week because it's going to be exciting. Price reach the daily demand zone and anything could happen. There could be strong reactions from the demand zone. So let's see what happens on next week. So signing off. See you next week. Until then, cheers.